Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments for Tuesday, September 9th, 2025, 9/9/25. Well, we've been waiting for this correction, I guess. Some of us have been for a while in cattle. We'll get to that. Lower across the board in the grains. After trying to make a run, these corn finished the day down 2 cents. Finished right on that trend line. If you follow my letter, if you've been reading what I've been looking at, um, this 420 area, 419 level. In fact, we settled basically right on that trend line. And we are gearing up for Friday's USDA, not surprisingly. The funds have covered about 50,000 bushels in the last 50,000 bushels, 50,000 contracts in the last 2 weeks. I think if you're hoping that when we get continued follow through, we really have to go get north of 425, then go get that July 4th gap price at 433. That is going to have to be the target here Friday. Hopefully, USDA gives us something good information on Friday. Hopefully, it's not a wet blanket. We have it a 35-cent rally off the bottom. If you take 392 to 424 and three quarters, granted, at 35 cents, it's just a start, especially after we had an 85-cent slide all year long. But it's just one of those situations we have to take what Mr. Market's given us. So we're at key levels here, key areas, and we're getting ready for Friday. November beans down 2.5, settled right at 1031 and a quarter. Again, it looked like we might try and do some more work to the upside, but no dice there. I think that moving forward, the number I'm most worried about or most watching is that 1021 level. That was last Thursday's low. It's also the halfway back correction of the bounce up. Remember, we went from 980, actually 981 and a quarter, to 1062. So that move, key level 1021, we did hold there last week. We'll see if we can hold it through Friday. I don't know how else to explain it. And if you're a producer, if you've got nothing sold, nothing hedged, you can certainly get something on here at 1020, 1010, $10, something, because what you don't want to be looking at is 970 or 980 again. So, wow, I should have done something. Just protect what you can, keep your upside open, and stop trying to, be Tarzan and pound your chest and say, yes, I know we're going to go higher. Defend what the market's given us. That's my advice. December wheat down 3.5 cents, traded as low as 519 and a quarter. Again, wheat is just trying to get out of its own way. The Russian crop got bigger. We've had good exports in the wheat. It's this market just continues to slide. If you look at Chicago December wheat, the number that has to hold is at 514 and a half, at 520 and a quarter. That's only at 6 cents roughly. Head start on potentially new contract lows. Friday is shaping up to be an important day. December Kansas City wheat finished the day down 7. Again, this is typical wheat doing wheat stuff. Yesterday it looked like we really might have something going on. Last night we actually made about a 1 week high and then settled lower. Wheat just cannot get out of its own way in Kansas City. You got to wonder if 501 and quarter holds, 501 and three quarters hold, excuse me. If that doesn't, then we're going to be in a situation. And again, if you read my letter, I've run the charts a million times. You can see that we are flirting with 1 year and then possibly 5-year lows in wheat. So now's not the time to have really, really expensive puts on. But boy, you need to defend the possibility that, there's another 50 cents or a dollar down the road. I'm not saying immediately Friday. That's insane. But I think down the road, if we keep grinding lower, historically, that's what this market risk is. And again, what am I basing it on? Just looking at the old charts. That's really what it comes down to. These markets are very technical right now. When you don't have a fundamental story, we are the slaves to chart formations and money flow and moving averages and anything else you can come up with. We are at a level where we can absolutely positively rebound. But if you're banking on that to save you, I think that you're making an error in judgment. So defend what you can. And boy, now is not the time to be selling 2 calls to pay for a put, something like that. You don't want to be capping up an upside rally if we are able to get it. Same thing for Minneapolis Minneapolis had a good bounce from 64 the other day to almost to just north of 80. And again, we were not able to hold it. So a little bit of a slide lower after that. Again, defend against Friday. Friday's a known risk event. So, do the best you can there. Looking at soybean meal. Soybean meal was green on the day, higher. And that's something to continue to watch. We actually gapped open higher. There's a gap on the daily charts now in set meal. So yes, that's in delivery, but it's something to continue to watch. Even if you look at October or DEES, I'm taking a look at DEES meal right now. That was higher as well. Good recovery. We'll see. Again, a lot is going to be repriced on Friday, depending on what happens with the USDA. And then we got to finish the day with cattle. Boy, we've been waiting for it for a while. A lot of people have been waiting for it for a while. We're limit down here today in fat cattle. These finished down 6.640 at 231 and change. A little bit off limit. The low is 231.05. We settled at 231.175. But if you look further out, everything was down anywhere from 6.5 to April was down 7, June down 6.8. So a lot of these things were at limit or close to limit down. Feeders down 9.25. That's right, down $9.25. We had a $10 range today. Just about, if you look at October feeders, 359.10 down to 349.90. Okay, call it $9 and change. But again, and we'll see what happens tomorrow. Extended limits tomorrow. Are we going to be down another 9 tomorrow? Are we going to be down another 6 in cattle? What sparked it? Well, two things. About 48 hours ago now, President Trump made some comments that he thought that eventually cattle would do the same thing that eggs and everything else did, was get cheaper. Although we didn't move initially off that. I think what really spooked the market, in my opinion, was the revisions on the job number. If you look at the headlines today, the Bureau of Labor Statistics took back roughly 1 million jobs. So they reevaluated a bunch of old data and said, oh, you know what, we were off by 1 million jobs. We really didn't create 1 million jobs. Market didn't like that. Are we heading to a recession? We've been arguing about, are we in a recession since probably, the middle of the election cycle on the last go around. We were waiting. When's the recession going to come? We'll probably see, we started to see lower cash a little bit last week. Certainly, my guess is this week cash will trade lower when it eventually does trade. However, here's one caveat. We've seen this before where we're down sharply and then the market reassesses it and turns around. So this is a great time to make sure that if you have puts on, if they've gained value, you look for opportunities to take risk off the table. If you have a put that you paid 3 or 4 cents for that's suddenly worth 8 or 9, make sure that you're doing all you can to recoup the value in those options. Sometimes you can roll them down, sometimes you can't. That's exactly what I work with producers doing. We have to look and see if there are opportunities that make sense to do that. But certainly, this is the time where we've talked over and over again where you're going to want to have had a floor when this market corrects. Nobody got a special text message yesterday. I certainly didn't. Nobody said, make sure you sell your cattle. And so we'll see. Tomorrow's going to be a big day. There's lots of downside targets. When you're at all-time highs, you can almost throw a dart. It's like hitting, a wall of balloons. You're going to find some target that makes sense to you as far as downside goes. If you read my letter, I keep it very, very simple. I look at trend lines and I look at the historical retracements that seem to always come up in these markets, the Fibonacci's. I have those all in my letter. Finally, in the hogs, considering the fact that, cattle was limited down, hogs held in there pretty doggone well. April hogs only down 22 cents. We only had a 75-cent range in April hogs, 93.75 to 93. That is odd on a day where you had so much pressure in cattle. So if you are a hog producer and you just got spooked by watching the cattle market, the exact same thing, but potentially could happen to hogs. not saying it's going to, but it just goes to show you, it's a buyer beware market, a seller beware market as well right now. So if you've got nothing hedged, boy, you got to remember, if you look at April hogs, just back in July, they were sub 84. We're nearly at 94 right now. Do something to protect that $10 in case we have a day or two like we just had in the cattle. This is Chris Robinson, Robinson Ag Marketing. If you're looking for help, even if you just want fresh eyes, if you've got a problem, you say, hey, how would you handle it? How would you manage this risk? Give me a call. We can talk about it. 312-638-8868. Have a great rest of the night.